Hello and welcome to our video. Today we will be discussing on the origin, rise, and fall of Silicon Valley Bank, also known as SVB. SVB is a California-based bank that has become well known for providing financing and banking services to startup companies in Silicon Valley. In this video, we will explore the history of SVB, its success, and the challenges it faced that led to its decline. Part 1, Origin. SVB was founded in 1983 by Bill Biggerstaff, who saw an opportunity to provide banking services to the growing technology industry in Silicon Valley. At the time, there were very few banks that understood the unique needs of startup companies. SVB's early clients included companies such as Apple, Cisco, and Intel, which were all growing rapidly and needed financing to support their growth. SVB's early success was driven by its ability to provide financing to these companies when other banks were hesitant to do so. The bank offered lines of credit and venture debt, which were essential for startup companies that had not yet reached profitability. SVB also provided banking services such as checking and savings accounts, which were necessary for day-to-day operations. Part 2, Rise. Over the next few decades, SVB continued to grow as Silicon Valley became the epicenter of the technology industry. The bank expanded its services to include international banking and wealth management, and opened offices in other technology hubs such as New York, Boston, and London. SVB's success was driven by its close relationships with startup companies. The bank's bankers understood the unique needs of these companies and were able to provide customized solutions to help them grow. SVB also offered networking opportunities and educational resources to its clients, which helped them connect with investors and other entrepreneurs in the industry. By the early 2000s, SVB had become one of the most successful banks in Silicon Valley. The bank had a reputation for being innovative and forward-thinking, and had played a key role in helping many of the world's most successful technology companies get off the ground. Part 3, Fall. However, SVB's success would not last forever. In the mid-2000s, the bank began to face challenges as the technology industry changed. The rise of alternative financing options such as crowdfunding and peer-to-peer lending meant that startups had more options than ever before when it came to raising money. At the same time, SVB faced increased competition from other banks that had realized the value of serving the technology industry. This competition put pressure on SVB to offer more services and better pricing, which eroded the bank's profitability. Finally, in the late 2010s, SVB faced a crisis when it was hit by a series of scandals. The bank was accused of violating anti-money laundering regulations and failing to report suspicious activity by its clients. These scandals damaged the bank's reputation and led to regulatory fines and a decline in business. Conclusion. In conclusion, Silicon Valley Bank was a pioneer in providing banking services to the technology industry. The bank's early success was driven by its ability to understand the unique needs of startup companies and provide financing when other banks would not. However, as the technology industry evolved, SVB faced increased competition and pressure to offer more services at better prices. The bank's decline was further accelerated by a series of scandals that damaged its reputation and led to regulatory fines. Today, SVB is still in operation and continues to serve the technology industry. However, its dominance in Silicon Valley has been challenged by new players, and it remains to be seen whether the bank will be able to regain its former glory. Thanks for watching and subscribe the channel for more informative videos.